one rental at a time. It is 7:30 Pacific on Saturday, March 5th, and this is your daily financial news. Yes, we do a daily show daily, which means Saturday and Sunday, Sunday included. As we get started, I want to first congratulate all of you that have been doing the work, whether you were successful in getting a deal or not. I want to say I'm proud of you. Keep doing it. We successfully broke 500. We are now at 506. Couple of quick things. Yes, you bet your bottom dollar we are going to keep tracking and keep the score going. Yes, I will be dyeing my hair purple probably sometime next week. We can't yet leave these little rascals at home as they have been known to lick each other, and that is no good when you have significant surgery. So once the dogs can be left at home, probably sometime next week, I will get the purple hair as promised. More importantly, now we are going to see who wants to contribute, right? We are going to make a large donation to the Fresno Food Bank. This was always an important part of the challenge to me. I will be cutting $5,000. And we're going to wait until April 1st. Actually, let's say March 31st. I don't like April Fool's Day for this. March 31st. I know we have guaranteed contributions from Dion, Matt the mortgage guy, the lumberjack landlord, Stephen Dow from Velocity Mortgage. And I'm sure I'm missing a couple. But if you want to participate, you want to give a little something, let's figure out how we do that. Hopefully, with all of the experts and other followers of the channel that want to contribute, maybe, just maybe, we get up to $10,000. We will see what happens. So again, I appreciate all the congratulations and all of that, but remember, this is our channel. You watch this, you do the work, you're the one doing all of the work. In order for us to get to 1 million, I need your help. Share, invite, ask others to join, be a part of this movement. There's a lot more good news than bad news. You too can improve your family's future. So let's read off the 10 names that helped us get over 500. Here we go. Kyle, congratulations. Diana, congratulations. D Yang, congratulations. Actually, you got 2. D Yang, congratulations. Aviad, congratulations. Maskey Finance, congratulations. And again, thank you for bringing me on your YouTube channel. That interview was a lot of fun. And then we got the big boy, as you saw yesterday evening, Matt, aka Lumberjack. Matt. And finally, the 6-unit building that will always be number 500. Congratulations, Matt. So very cool, folks. And yes, in about 27 minutes, we will go live at 8 a.m. for the weekly Q&A. Hopefully, we'll see you there. We usually get about 100 folks. So come and join in. Let's see if we can break 150 for a live session. Don't forget to like, subscribe, comment, invite others. Here we go. First, I think there's been a lot of bad news, just a lot of bad news. So what I wanted you to realize is there's actually some good news in the economy. I have found 4 things that really should be tailwinds, perhaps provide a buffer to dent what otherwise would be no bueno, no good. So I just wanted to share those with you as I see them this morning. Number 1. The U.S. consumer collectively is sitting on an excess of $2.4 trillion. These are funds that have been put away over the last 2 years that exceed what we had going into the crisis. Some of that is stimulus money, no doubt. Some of that is savings from not having any fun or doing anything. But yes, that should provide a buffer because we all know inflation is raging, and unfortunately, inflation is going to get worse before it gets better. Number 2, we do have 10.9 million job openings. I do believe there's a good chance that unemployment rate goes down in the short term. I'm still trying to reach out to that economist so we can talk about the 2% unemployment rate that he called, kind of have that debate. I think it would be fun. But yes, I do think that the unemployment rate in the short term could go down. It's certainly possible. Number three, something that I missed or did not give the importance is the return to office. This is going to be important. Core CapEx orders in January set a record of $80 billion, technically $80.1 billion. These are large capital purchases by companies. To me, this makes total sense. Most of their offices have been half full, best case. So again, as the return to office accelerates, as we go back downtown, I do expect companies to spend a bunch of money, and that is net good news. And then finally, we do have 3.8% unemployment. That again is U3. We did get that on Friday, I believe. That just means the employee still has the power. The employee still has the power for wages. If you want to raise, unfortunately, as hard as it is to hear, if you change employers, you will likely get a decent wage. You stay where you're at, you're going to get 3, 4, 5%. You buckle up, go to a competitor, you might get 10, 15, 20%. It's just how it works. So again, there is a lot of good news. I sometimes look into the bad and look for the cracks in the system, but I did want you to realize there's quite a bit of good news. I see these as shock absorbers for the economy. There is no doubt that the next month, 6, 8 weeks will be rocky. These shock absorbers are certainly strong enough to get us through the next couple of months. After that, we'll see. But I will be here daily to talk about it. The big number of the week, every week has one. You know it does. We talk about it every weekend, is going to be CPI, Consumer Price Index. It came in hot, 40-year high last month at 7.5. Expectations of 7.8. We are playing the over-under game as we like to do. You can take the over-under, leave comments below. My number is a flat 8%. And unfortunately, I think it goes higher from there. Here's the deal. This absolutely could just be, kind of third person talking about myself. Michael Zuber's crazy mind trying to manufacture a good story. I totally get it. But this is what I believe is going on. I have said for quite a while that the Fed needs to surprise Wall Street. I believe for the last 3 or 4 weeks, Wall Street knew what to expect. I believe Wall Street has given Powell an opening. Powell just last week talked about a 1/4 point raise in the federal funds rate. That is a joke. If that happens, he is Arthur Burns 2.0. Arthur Burns equals inflation 2.0, not good. However, I believe there's a chance that Powell is playing rope-a-dope. He knows that Wall Street wants to hear a 1/4 point, so he's saying a 1/4 point. Again, I realize I could be manufacturing, I could be making up tea leaves, but my hope is Powell comes in and smacks Wall Street in the middle of the month with a 50 basis point cut. To be clear, 50 basis points will do nothing to inflation, but it will smack Wall Street. It will set us on a path that the Fed is in charge, not Wall Street. Right now, Wall Street is in charge. Wall Street has learned that if they throw a fit, they can make the Fed do something. I believe it is time for that to stop. I believe it's time the Fed punished Wall Street and it helped the everyday person. I believe a 50 basis point cut is what is required, not required. We'll see what happens very, very shortly. And again, all signs point to a 1/4. I realize I could be manufacturing this, so be it. The 10-year has been on a wild ride. We've talked about it a couple of times last week. My question for you, as it closed Friday, I think it was at 1.82. Will it see 1.7 or 1.9 next week? A lot of that depends on what's going on overseas. A lot of that will depend on CPI on Thursday. Don't know if you've seen oil, but oil is spiking. Along with oil, you've seen some pretty dramatic rise in gas. The average gallon of gas is now $3.84. That is 26 cents in a week. Ouch. Do we see $4? I think we certainly see $4. $4 is coming without question. Could we see 4.25 or 4.50? Maybe. The one question I have for you, and this is a question every American must consider, in my opinion. I believe it is, frankly, I believe it is not okay that we are buying Russian oil today. By saying that, I realize that means that my gas in California could very easily go to $7. I realize that. And it could be there for quite a while, months. Just ask yourself, are you willing to pay an extra 50 to 75 cents to cut off Russian oil? Because that's what it takes. Some of you, yeah. Some of you are like, no, I can't afford it. My dollars are too stretched. It's an interesting place. Just remember, we're not Finland. I think that's 98% that comes from Russia. Germany at 40%. Australia, something like 90%. These are tough choices. Tough choices. Another thing we have to watch, a lot of talk about oil, but if you haven't seen wheat in wheat futures recently, rising food prices, folks, are coming. Wheat has been what's called limit up 3 days last week. It might have actually been 4. That is not good for future food prices. Also, I want to be clear, it is very likely that we could have 2 huge humanitarian problems in our very near future. Meaning, after peace is established, however way it goes, there are going to be people that are truly starving, both in the Ukraine and in Russia. Russia, folks, 80%, probably more now, are not fans of Putin's war. Unfortunately, the everyday Russian, is feeling this a lot more than Putin. Be ready. It's coming. As for next week, we've got a lot of important stuff. Monday, we have consumer credit. I expect that to rise. I believe the consumer is getting stretched and they are still shopping. So consumer credit should go up. Tuesday, we have Dick's Sporting Goods. What is going on with sporting equipment? Petco and Stitch Fix. Stitch Fix has been interesting. We've talked about them probably the last 3 quarters. They missed 2, they exceeded 1. This stock peaked at $75. It's at $11 now. Wow, that's an 80% haircut. Wednesday, we've got Adidas, Oatly, and Campbell Soup. Again, what is going on with kind of cupboard food and the retail? Thursday, we have Ulta Beauty and DocuSign. Then we also have CPI, which is the big number of the week. Again, 7.8 expected. I'm calling 8. Jobless claims. And then finally, on Friday, consumer sentiment. I don't know when the survey was done for consumer sentiment. I believe it was the week prior to Russia invasion. So it might be a number that doesn't include the latest and greatest stuff. Just saw that there's a Canadian bank, TD, that is buying First Horizon in an all-cash deal, $13.4 billion. I believe there's a lot of all-cash deals coming, and this is just another one we've talked about. Don't know if you've heard this, but it looks like the White House is once again talking about student loan payment extension or delay or whatever the right word is. What do you think about that? Student loan payments have been, postponed or delayed for a year and a half now, I think, something like that. What do you think? Should we forgive some, all, most, a little student loans? I don't know how you feel about it. Just curious. Leave your thoughts below. I think it's a very slippery slope, in my opinion. Again, I've asked you earlier, should the U.S. buy Russian oil? If you say yes, if you say no, are you willing to pay 50 cents, 75 cents more? Because that's the trade-off. Again, Italy and Australia, upwards of 100% of their oil comes from Russia. Difficult choices. Don't know if you heard it, but Biden is out talking about get back to work, go back to the office, fill up our downtowns. I just think it's interesting how it's flip-flopped, but that does mean that we're going to drive more. I have seen the Silicon Valley highways be a little bit more crowded during the day. But again, going back to the office means we're going to drive more, use more gas, all of that stuff. I think it's time to get back to work. Yeah. Again, I talked about the tailwinds. We hit that. And then the last question I have is, does stagflation mean recession? The answer is no. It does not necessarily mean. There's a couple of things that stagflation is. It could be very, I don't know what the right word is, icky for a long time, right? Stagflation means high inflation, low growth. It does not mean negative growth. So I believe the Fed and Powell has the power to end stagflation. Unfortunately, he must create a recession. I believe if they try to do this soft landing, 25 basis point raises every meeting for a year and a half, stagflation stays with us. He has to shock the system. He has to reset risk assets. I don't think he has the stomach to do it. I think he's an intellectual that's probably he's not Paul Volcker. Paul Volcker didn't care if people hated him. He did what was required. And he was vilified while doing it, but celebrated for decades after. I don't think Powell is willing to suffer through that. So we are going to get stagflation. It is going to be with us for years. And it's because Powell doesn't have the stones. But as I said in the beginning, maybe he's playing rope-a-dope and he's going to smack Wall Street on the 16th of March. 2 weeks away. It's going to be interesting. All right, folks, 86 of you watching, 28 thumbs up. Come on, what's going on? But a couple of things I might try. I just wanted to highlight that I do enjoy your selfies. I got this selfie on Instagram, so tag me. It actually says, Macy loves to read. Might as well start her on a subject that will serve her throughout her life. Good job, Macy. Congratulations. And I got this note again on Instagram. I will read it to you. Hi, Michael. I closed on an investment property yesterday in Riverside County. I live in Orange County. It's been 11 years since I sold my last rental. It feels great to invest again in passive income. Thank you for your channel, your daily news, and all you do. Your passion for what you're doing truly exudes through this space. Your buy box method and teaching the importance of yield is some of the major points that help me find and lock in this deal. Much appreciation. Folks, I'm going to try to take this phone off the stand now and show you where I put these things, because when you send them to me, I print them out and then I put them on this board. So let's see how this works. This might be kind of messy, but let's do it. All right, happy. Or Sonny, I'm going to put you down. Let's walk over here. So I don't know if you can see this, but look at that. These I print these out, post them here all the time. Here are the book, or all the pictures with the book selfies and the cards that you guys send me, right? All of these great. And then here are all the notes. I want to fill up these boards. If one rental at a time has helped you, tag me on Instagram, take a book selfie. I will print it out and post it. Fill up this board. We could fill up this whole space. I'm willing to put all of this up here. So let's have some fun. Thank you for that. Bye.